What's up, traders? Anthony Crudele here, and welcome to this week's episode of Develop Your Edge. In today's show, I'm going to go over when I use targets and when I use trailing stops instead of targets. But before we get into that, let me take you to this week's Ninja Trader Charting Edge. All right, traders, pulling up crude oil here on the daily chart, same as usual, Bollinger Bands 20 period, 3 standard deviation. That red line there is the 10-day moving average. Gold is the 20-day moving average. Pulled up crude oil because starting to get a little bit more active in crude oil again lately. And I talk a lot about in this segment and on the show about environment, identifying environment, bull mode, bear mode, chop mode. Well, crude oil, to me, the environment right now is very similar to what we saw before on the charts, where we were kind of consolidating and then getting ready to make a move higher. And I really like that as a day trader and as a swing trader. So I want to go over something that I'm noticing here in crude oil. First, we can go back in time a little bit here and see when we made these lows in crude oil, basically from zero negative, and came all the way back up, had a consolidation for a good period of time, just really a long period of time, consolidating on the highs. And I go back to this area right here. And what I noticed here was we tried to make a move lower off of a consolidation, off of a high, and then we had that 10-day moving average dip start to cross back above the 20-day, and then it started to really grind above it, and you saw the Bollinger Bands start to open up right there. That, to me, is really what set this trend on the technical side of things when I saw that. So if you go back to where we are here, now, it's similar to the fact that we made a high and we've been in a consolidation. Not in terms of how long we've been in a consolidation, because this one's actually a much shorter period of time. But if you go back and look here to there, right? Make that high, a little bit of dip below it, 10-day starts to cross back over, start to get a little bit of chop around there, it starts to regain it. And then you see the Bollinger Bands now, instead of coming in, they're starting to open up again. So I like this as this consolidation here and getting ready to potentially break out to the upside. So as a day trader, for me, I identify this market as sideways with the potential of going higher. So intraday, when I come in, I'm looking at longs only. I'm going to probably cover some of my position at targets, maybe leave some trailers on, and who knows when this thing gets ready to break out, but it looks ripe to happen. We never know when it's going to happen or if it's going to happen, but I like this type of setup. So when I come in intraday, I'm focused solely on the long side, and I'm going to take some off at my targets and try to leave some runners for the potential of eventually this thing starting to break out. And what I'll be looking for going forward is all of a sudden a spike, and that Bollinger Band starts to go up, and you go back in this time right here where it starts to go up with the Bollinger Band, and we could be in store for a decent move higher. Where it stops, we don't know, but I like the setup, and this is what I'm looking at right now here in crude oil. And that's this week's Ninja Trader Charting Edge. Now, let me take you to a tweet. I actually just tweeted this not too long ago. And I put, for longer term positions and swing trades, I don't use targets, I use trailing stops. This helps me hold winners because I let the market get me out. Let me take you back to the crude oil trade. And the reason I want to go back to this, the crude oil chart, is because for me as a trader, once I identify the environment, I'm going to decide how am I going to be trading that market. Right now with crude oil, I'm intraday, not necessarily set up for a swing position yet, because I think that it could still be in consolidation mode for a good period of time. We don't know. It's looking better on the charts. So right now intraday, I'm saying to myself, buy the dips at my support, use my shorter term strategy. And actually, let me pull up a 5-minute chart here on crude oil to show you exactly what I'm looking at. And what I'm going to be looking for is when crude oil gives me a long opportunity, I'm going to take some off at the targets, because then I'm actually going to use targets for this, because I'm going to be trading intraday and basically intraday swing trading, where any one of these days I think we could break out to the upside. We don't know when, but by the end of the day, I'll be out of that position. Until I start to see crude, as I mentioned on the daily, start to hold up in that Bollinger Band, then I'd be looking for a swing, and I would be using trailing stops. But intraday right now, because I like the look, because I can identify the environment, rangy with the potential to break out to the upside, bullish mode, almost potentially into that bull mode, I will look at my shorter term charts and say, okay, First, how does a trade set up for me? Most of you know I keep the same charts I look at on the daily and the weekly as I do in the shorter term. This is a 5-minute crude, same setup as it is on the daily. 20 period, 3 standard deviation Bollinger Bands, 10 period moving average, and 20 period moving average, simple moving averages. When the markets are going down and the Bollinger Bands start to come back in and we start to get above these moving averages, I like that as a potential buy signal for me, similar to what we saw here. But what would be my targets? And I want to go over this because I think this is important. Identifying how I'm getting into a trade and how I'm identifying a target. So crude oil, once it starts to have the Bollinger Band start to come back in and it gets it back above there, very similar to what you see there. That's what I like for a long setup. And my targets are going to be the old peaks of the Bollinger Bands. And this is, like I said, this is just a 5-minute setup. And as you can see here this morning, we went up and tested those peaks of the Bollinger Bands. Now, I mentioned that this is a time where I'll be using targets because of everything I said. And I will also be using an intraday trailing stop, and that's where the moving averages come in. So really for me, because I think it's rangy, out of probably 60, 70% of my position at a target, maybe even some scales along the way. However you decide to trade, that's up to you. You guys know I've talked a lot about scaling, but I use those peaks as targets. I like them because when we get range bound, I just like to be able to see what has the potential range been using the Bollinger Bands. As we start to expand, I like to use those as support and resistance. This is a lot what I've talked about with the development of my indicator. And to me, they're very good areas to use for targets. So in the short term, I identified the bigger picture, go to the short-term charts. That's one of the setups that I like, and that's what I would use for targets. Now, what would I not use targets for? Let me take you to a chart where the bull trend was identified. Here we go with Ethereum again. How much have I talked about Ethereum? A lot lately. Why? Because it's my biggest position, and I believe in talking about markets that I'm actually trading. And Ethereum continues to be a big position for me. It has been trimmed down a little bit, and I'm going to explain to you what I did here. Going back months, we all know I've talked about how I thought Ethereum was setting up. There was a lot of reasons beyond technical as well, but when we looked at the charts, almost pretty similar to what I saw in crude oil, what I'm seeing in crude oil right now. And I like these types of setups where we have make a high like we saw here, revert back in, chop around the moving averages. This looks very similar to me to the crude oil setup. Then we start to get back above these moving averages, and then lo and behold, we started to rally in Ethereum. Like I mentioned really on the crude oil chart, a lot of times, and you guys know I was in Ethereum through a lot of this at the long side, I normally would use that top Bollinger Band as an area to cover. Why on my swing position, on this longer term position, did I not use that area as a cover? Number one, when markets are making all-time highs like Ethereum was, I don't care what technical analysis you have, it's almost impossible to tell where these things are going to stop, especially crypto. So my analysis really means nothing in the scheme of things. Yeah, it's a point of interest to me, those peaks of those Bollinger Bands. But when markets are making all-time highs, I can go back and tell you years of trading the S&P. I had no idea it was going to go ever as far as it has. And when we started to get up in there, and I was long, I've talked about this a lot, I started using the moving averages, the simple moving averages to trail my stop. Bollinger Bands are going up. We're in bull mode. Why would I use a target? First of all, I had no idea we're going to get to 4,200. And when I saw it, I was like, great. Do I just sell them here? No. I waited for some closes and tests below the 10-day, got me stopped out, got below the 20-day, got me stopped out of some. I've still been keeping a core position, but because I was able to cover some there and I saw it start to stabilize here, I'm actually waiting for some new opportunities potentially to buy those back. Trailing stops actually were better than my original targets of what I would have been using for the Bollinger Band peaks. If I would have just sold them here, I would have missed out on all of this. Let the market get me out. You know, I'm not going to go back to that tweet, but that's what I said. I don't know where this thing can stop. There's not an analysis tool out there. I mean, you could look at these overbought RSIs and all these things. There's just no way of really telling where a bull market's going to stop or a bear market, right? I think better for the bear market. I've discussed that a little bit in the past. I think technicals can be better for that. But in these situations, because I feel that there's no true clear way to determine where I should cover, all I could do is manage my risk when I get a breakout trade. These markets move so much further and go longer in these trends than we ever anticipated. So a simple philosophy I have is when something sets up on the longer term chart, 60-minute, daily, 60 minutes, like kind of my medium term, daily or weekly, when I start to see them hugging those Bollinger Bands like that, I just apply a simple technique of putting a moving average in there and say, look it, until I start to see it violate, and I'll put some blow up stops along the way, got triggered there and triggered there. And look, it saved me from really giving back that whole trade potentially. And that's just, it doesn't have to be this. It can be anything you want. Nothing is perfect in this business. How you conduct your way of trailing your stops is entirely up to you. I like to use really a 10-day moving average, and I've talked about this so much on the show because it's just a simple way to gauge how powerful a trend is. And if a trend is going in your direction and you put this time in, why not hold it for as much as it's going to be? One final thing is, like I said, I ended up getting stopped out of some of them here, but if my original thought was to sell on one of these peaks like I talked about on the 5-minute crude, I would have sold them way lower than where I did here. But did I sell the top? No, I sold them way below the top. But that's part of trading. I don't know. Once it proves to me something, the market got me out. The market got me out. That's why I like to use this stuff when I see things set up on the daily charts or the longer term charts. Let the market get me out. When I know that when I identify that the situation and the environment, like in crude oil right now, is choppy with the potential of breakout, I'm going to use more intraday trading and more intraday targets. And when it does finally set up, then maybe I do try to hold crude oil. So that's my thoughts on when I use targets and when I use trailing stops. Hang tight, I'll be right back with my final thoughts.
Why did I add futures to my trading strategy? 24/7 access to diverse global markets, like wheat. Can you say growth opportunity?
We should probably harvest that.
Final thoughts for today, traders. Whether you want to use targets or use trailing stops to let the market get you out, that's entirely up to you. I personally like to let the market environment dictate how I'm going to execute my trades. If we're in a consolidation, I like to use short-term trading and targets. If a market's in a breakout mode to the upside or to the downside, I like to use trailing stops and let the market get me out. But once again, it all comes down to you and your mindset for execution. Huge announcement last week from CME Group. They are now going to be launching micro crude oil futures, symbol MCL. They're coming in July, and to learn more about micro crude oil futures, go to activetrader.cmegroup.com. Remember, everybody, if you're enjoying the show, click that subscribe button. And if you have any questions or comments, please put them down below. You could also DM me on Twitter. My DMs are open, @AnthonyCrudele. And don't forget to check out Instagram. I'm now posting clips from this show and the Futures Radio Show podcast regularly on Instagram. Anthony C. Crudele. That's a wrap for today. See you next week.